here. Welcome, homesteaders and news junkies, to Rebel News. I am your host, Professor Tuck, coming to you live from my off-grid setup, where we blend self-reliance with what's happening in the world. It's April 16th, 2025, and today we're unpacking the top 5 trending U.S. news stories shaking up the country. From global trade wars to clean water fights, these stories will hit your wallet, your community, and your way of life. We'll dive into each topic, break down what it means economically, socially, and culturally, and then open the floor for your opinions. Drop your thoughts in chat. Make sure that they're all in all caps. I want to hear how these issues are hitting you, your homestead, or your neighborhood, where you're tuning in from. Shout out your location. Let's build this community. Grab tea, or as in my, I'm actually having some fruit punch tonight because I don't want any more hot coffee. I want to hear how these issues are hitting your homestead. Okay. The Federal Reserve interest rate decision. Okay. At number 3, the Federal Reserve grabbed headlines today by hiding interest rates, by holding interest rates steady at 4.5 to 4.75%. Reuters reports inflation is stuck at 3.2%, and with jobs growing, 200,000 jobs added last month. Fed Chair Powell said no rate cuts until at least mid 2025. So we're talking about June, July. But that's kind of when we'd be hit by the effects of the tariffs, anyways. Markets dipped 0.3% today, and everybody's watching housing and small business loans. Okay, so real simple. As I've looked into this, the reason why, and the Fed said something, and I don't think a lot of people picked up on it. One of the things that the Fed said was that this was far beyond the amount of tariffs that Trump has put and how extreme he's gone is far beyond their projections. So what they're saying is we don't know what the fuck's going on. That's what they're saying. That's really the reality of it. They just don't know what's going on, and so that's why they're holding off on it. Because on one hand, inflation's at 3.2%, but that's part of de-dollarization, because as those dollars come to roost, our inflation goes up. We usually export about 3% of our inflation while keeping 2% at home. Now we're starting to see some of it come home by the inflation rate with like 3.2%. Even though they've added 200,000 jobs last month, there's a lot of uncertainty because of this whole trade war that's going on. It's a very, very big, it's a very big thing. So, but he's not going to do any rate cuts. Says that he's not going to do any rate cuts, but I don't see anything happening, because here's the thing with us, because what happened because Popular Preparedness, he did an interview with the guy that does All About Shipping, and I watch his channel too. Anyways, he was talking about like how everybody was trying to front in the system, get everything in ahead of the tariffs because they already knew it. The other part is the Border Patrol is the one that is responsible for collecting the tariffs. And so now they've got this massive tariff thing that they got to do, and they got to keep it updated because it's constantly changing as Trump changes and keeps messing with the numbers on almost a daily, if not hourly basis. The CBP, the reason why he's had to put some pauses, and instead of doing it in March like he wanted to, he had to hold off for 30 days, is because the Border Patrol doesn't have the infrastructure for it. And so, I mean, with everything that's happening, it's gonna be about 6 to 8 weeks before we start seeing the effects of the tariffs and the effects in the supply chain. Okay, that is, see, the CCP has a 90-day plan to squeeze America, and America has a 90-day plan. Both got prepared ahead of time and pre-positioned themselves as best as possible. We're going to see which one was smarter and which one was better at doing all of this. Okay, so the reason why Powell, why the chair is not moving anything is because until we see the effects of the tariffs, raising the interest rates or lowering the interest rates are going to cause more harm and volatility to the market. That's just really where it boils down to. Okay. The ripple effect is economically high rates mean borrowing stays expensive. Mortgages are hovering at about 7% pricing out first time buyers. Small businesses like a homesteader selling at a farmer's market face steeper loan costs. Small Business Association loans are up to about 8.5%. That is crazy. Consumer spending could be low, dragging growth. Socially, steady rates signal job market growth because they're not constantly raising it or anything else like that. So they feel that we're at the end of this inflation, but now we've got a trade war that is now refueling the inflation. So, but they do frustrate folks dreaming of affordable homes. So, anyways, I want to know what your guys' opinion is on this. Do you think I'm right? Do you think I'm wrong? Do you feel that I'm onto something? Is there something that I'm missing as part of this? And what's going on there? I'd love to hear your guys' thoughts.